Good morning. It is almost exactly 10 UTC here on Thursday, the 14th of November. So we're going to go through Bitcoin, just break down a couple things. First off, today we got PPI coming in. Expect a little bit of volatility coming in at the New York Open, especially if it's not as forecast. It's always the one you will look for. Fed Chair Powell is also speaking tonight at 8 UTC or 9 p.m. UTC plus one, which I'm in. So watch that. Again, highly volatile event. Besides that, not a whole lot going into the weekend. Retail sales might be a little bit more significant since we are November, and a lot of retail sales are expected to start ticking up aggressively. But until then, not a whole lot going on, and even into the next week, it's pretty quiet. But definitely today, watch for those two volatility events. Looking at the long short ratios across the board for Bitcoin, yeah, there's okay, don't really care about that. But the big thing here is in the last, I don't know, 3 days or so, we've seen a pretty big uptick in longs in general. So the market is getting back towards neutral 50-50 retail long shorts. And generally speaking, when we start getting very, aggressive with the longs, that's usually when we start looking for some breakdown and some retracement, basically punishing the late longs that have missed most of this entire move. So this is just something that's concerning a little bit in the local structure. So we have some potential for local failures as well. Looking at the lower time frames, again, it did spike to about 50-50 or about as close as you can get, and it's just slightly underneath it. So there is some aggressive buying by retail longs. Just keep that in mind. That's definitely something to look for a potential local failure. But until something drastically changes, the high time frame uptrend is still to the upside. Looking at the funding rates, this is where it starts to get a little bit rougher. We actually came back to pretty neutral funding rates later yesterday, which was nice, but they're getting very, very, very overheated here. So keep that in mind. Lots of stuff that, if especially OKX is a big one, that's very much incentivizing bearish market makers who provide liquidity to go lower. So something to keep an eye on. The funding rate heat map as well. We're seeing quite a bit of overheating on some of these altcoins, some of these meme coins. So if we do have some localized failures, definitely check out some of the shitty coins. If there's some breakdowns from Bitcoin, expect some of these, especially with massive bearish funding rates, to have a bit of retracement. So something to look for. Looking at the heat map, just on liquidations, looking from like a week out perspective, right? We had that big rip to the upside here. It's pretty mild. We actually have a big liquidity gap above us, so there's a potential swing failure if we come back into this high, and just to do a little pop to come back down to retest some levels lower. If we look in the local daily liquidity stuff, right, there is some good liquidity just above us if we can get that local gain to get us back up towards 92. I would say around 92.2k or something like that. We would probably see a retest of this swing structure, which I'll go through on the trading view chart. So if we get that cleared out and then we start seeing some failures, I would probably want to see us break down and make some new lows and come back down and punish some of the late longs here. So that being said, looking over at trading view for the general plan in this zone, it's still in a generalized uptrend. I would expect that if we have the continuation, which we're all expecting, that every level's a potential support buy. With the fact that retail starting to smash the green button again, there's a localized swing failure here that if we do have a rejection, I want to see a break back down into this level, and then we'll probably get this to play out where we break back down to the demand, which is really strong at 88k. Now that doesn't break the high time frame structure. I think in general, if we're just looking at it from that perspective, we're kind of looking at it in terms of, the vertical accumulation trend line effectively, where we're looking something like this. Obviously take trend lines with a grain of salt, but something like this would definitely stick out to me as somewhere I'd be interested in buying if we break back down to. Yeah, don't be specific about it, but if we do have a move back down to 87, 88k, something like that, I think it still looks good. Really, that the structure that breaks this kind of upside vertical accumulation, which is what we're in right now, is to break 86.5, create any new lows off of the low we did there on Wednesday. So, but that being said, I think it still looks fine. It still looks good. Watch for some local plays. There is that potential failure. So if you have some local longs, that's a great take profit point. And if you get some confirmation of the failure, you want to see retest back at the daily, back into the swing structure. And only when you flip that level and start to break down, do you want to see retests at previous daily opens and then back into that bigger demand zone. We can wick all the way back down to the lows. Heck, we could even wick below it, but any closes 1 hour, 4 hour plus, I would expect us to start having a more significant breakdown as we are seeing retail stepping in and very bearish funding rates. Also, it is Thursday, so pretty high volatility day. Expect Powell's speech to potentially cause some volatility, but this all feels very vertical accumulation, similar since we're only on the 1 hour to the time frame from 4 years ago. November 2020. The price action looks very similar. All we really need to do is gain the next level. But a lot of this comes in with we have really strong upside drives that take out the local short liquidity, and then we have to farm out more structure to do that again and again. But as retail steps in and go long, there's more incentive for us to go lower and deeper into this upside move before we continue. So generally speaking, every level is a potential buy. If we do have the breakdown here, you're looking to get a bit long in this zone until we break that, which invalidates the upside move locally. If we break it, sweep some liquidity, and then regain it, it's full send again. But, it's pretty far below us. I like the idea of a continuation. Any gains the local swing highs, likely new highs and new all-time highs. So that's that. Take it easy and catch you later.